All right, I'm here with Chris Rebentisch, CEO of 1933 Industries. Chris, thanks for taking the time to chat today.
Thanks, man. Thanks for having me on, Evan.
So I'm starting all the interviews these days trying to tackle the elephant in the room, COVID-19. Can you just describe how that's affecting your operations, and how is it affecting your ability to get product in the hands of consumers?
Yeah, it's a very interesting times. I was born and raised here in Vegas, and I've seen this town do just about anything you can imagine. And but what I haven't seen before is the strip just shut down. So that is something absolutely new, and it's a little eerie driving to and from work. But we're still going. 1933 is fortunate to be named as an essential business in the state. So the state of Nevada a couple of weeks ago shut down all non-essential businesses and asked everybody to self-quarantine for 30 days. And so the governor then came out a couple of days later and said, yes, marijuana is an essential business. And, it's kind of that frenzy of hoarding happened, and everybody was lined up around dispensaries. Every single one had lines wrapped around the buildings. And, then the governor came out a few days later and said, yeah, let's not have people in dispensaries or in front of dispensaries. Let's do delivery only. And the problem is Nevada's never been set up for a delivery state. California is a heavy delivery before it was ever recreational. Nevada never set up that infrastructure. So there's not a lot of compliant vehicles. There's not a lot of dispensaries who had the online ordering systems in place and the infrastructure to support that. So the problem we're having now is that the dispensaries can't meet the demand from the consumer. There's no way to service the customers. So they still are. I would probably guess that they're servicing about anywhere between 20 and 40% of their orders and the requests from the consumer. But there still is a high demand. I'm in the industry. I've been in it for a while, so I got to hear on the black market, and everybody's looking for weed in this town,
right?
Not just through dispensaries. So there's still quite a high demand. It's just the inability to service the product. So that's really what we're running into. But that hasn't affected us much.
Okay.
We have really good relationships. We have really good brand presence in this town with our brands, and a really high demand from the consumers in this town for our products. So, we're still getting products in. We haven't stopped production in any way. We haven't slowed it down at all. I'm under the impression and the belief, especially as it gets close to 100 degrees here in the coming month, that this virus is going to struggle to survive, and they're going to open up doors, and there's going to be a rush of demand. So we're continuing to not only service the customers that are ordering from us at this time, but we're for the first time being able to stack inventory, which has always been a problem of ours just because of our production capabilities and the amount of demand for our products. So we're taking it as an opportunity to really get ahead for the first time. So, like I said, it hasn't slowed us down. I know there's a lot of other companies that are having issues, but right now 1933 is in a good position.
Yeah, that's perfect. I mean, right now, all you can do is control the controllables. So if you can continue maintaining those relationships with the dispensaries, maintaining those relationships with the consumers, that's all you can do. Stack that inventory so that way when things do come back, you can really ramp things up.
One thing that has spiked for us is our online sales for our CBD products through CanHemp on CanHemp.com. And, one of our focuses in the coming months is to really get into e-commerce through a bunch of different avenues. And we've hired a couple firms and people to come in and help us with that. But this has been a really good start, as you've seen people buying. Amazon is going crazy, hiring 100,000 people in the U.S. just to fulfill orders. We knew that CBD would shift to online and e-commerce, but this kind of helped it as a catalyst to get there. So, this industry is somewhat about following the money, and the money on the CBD side is going to online and e-commerce. So, we're making our shift there, but we've had, pretty decent sales through our online e-commerce side.
Perfect. Well, I think that's a good segue, talking first about the cannabis, the THC, and then CBD, of just maybe giving a bit of an overview of your operations itself. Because I know recently you announced sort of reassessing sort of business priorities with the operations, but I think it was yesterday you announced that you announced your second harvest. So could you just give investors a bit of an overview of the status of your operations across the different states, and what you're prioritizing moving forward?
Yeah, our main operations are here in Nevada. We just brought on a 67,000 square foot cultivation facility. We had our first harvest in December. We just took down another harvest last week, and are continuing now to have continual harvest of premium flower that's going into pre-rolls and packaged flowers, and we're also being able to use for our high-end concentrates and products. So that facility is getting ramped up and more populated with plants and getting pushed to capacity, which is a great accomplishment for us, and our team has done an amazing job getting it there. We have a great extraction lab here, production facility, where we're able to make products not only for our own brands but for other brands as well. And we have our hemp manufacturing facility that manufactures all of our canned hemp products. We do all that in-house. And then we've got cultivation, production, and manufacturing in distro in California, in LA, up in North Hollywood. And that's coming online as well. One of the things that we announced today was that we were going to postpone two of the large projects that we're working on. And one of those was the expansion of our marijuana extraction facility to increase capacity. And the other one was to pause the construction of our hemp extraction facility. And both of those were done to preserve cash, to kind of to see where we're at, and to be smart about our spending. We would rather, plan for the worst and hope for the best. Yeah. And so that was kind of the thought process that went into that. And as we discussed as a board and a management team and with our advisors, that was best right now in the current economic climate, as we don't know how long this is going to last. So let's set ourselves up to survive.
Absolutely. And I think, as an investor, you have to look at that and appreciate that. I mean, the cannabis industry, it's no secret. It's been sort of dog days. Capital markets have been pretty rough for cannabis. And then you layer on top just, the COVID crisis. Now's not the time to have to go to the capital markets to try and get funding. You don't want to do that to your shareholders. It's not going to be good for the company. So I think just taking a really prudent approach and postponing as necessary is certainly a smart way to think about it. Now, I do want to talk a little bit about the cash balance and the financials, obviously with the release of financial results. But one thing I think would be great to hear your thoughts on, because I know we've talked about this on the aside, is just your strategy to the industry as a whole, and especially as it pertains to the brand partners, because that's something you guys really focus on. You've got some partners with some truly award-winning brands. And so I'd love to hear you articulate that strategy for 1933.
Yeah. You actually hit the nail on the head when you talked about kind of the capital markets and other cannabis companies that are struggling. I witnessed this a couple of years back as this giant surge for everybody to invest in, build infrastructure. And it's like, where are the sales at? Like, first, why don't you go get sales and show that you have shelf space and sell through, and then build the infrastructure to back it in. This industry put the cart before the horse on that one. And so we looked at it and said, the future is in brands. Like, you look at buying Nike socks or your toothpaste or whoever your vendor is for that, or your brand that you you follow and buy, that you can buy in any store. And so we looked at it and said, what is the future of this industry? Well, the future is not in these massive infrastructure projects. The future is in consumer loyalty and developing consumer branded goods that are in demand. And the demand for cannabis has been the same for 10,000 years. Like, it hasn't changed. It's hope and relief and comfort and euphoria. That's the same thing they're using the plant for 10,000 years ago, and it's what they'll use the plant for decades to come. And so we looked at it and we said, well, in this legal market, consumers want a little bit more, right? So they want to know who you are, what your values are. They want to know how safe the product is, how to dose. And so we went out and we built our own brands, and we partnered with some of the best ones that incorporated not only products that provided this hope and relief and comfort and joy, but were also safe and affordable and could be dosed and easily used, and were consistent, so that we can help build this consumer comfort to meet the demand of these products. So, we that's been the focus. That's the focus of the company. That's the future of the industry. And then if you look at it and say that's your revenue stream, if that's where sales come from, then infrastructure is how you reduce costs and increase margins, right? So, in Nevada, we dominate shelf space. Our brands are everywhere, and now we're having the infrastructure of our cultivation facility come online, and we were tossing around the idea of continuing with the marijuana extraction lab increase capacity.
Yeah.
And when, we looked at different ways, and we added some different pieces of equipment right away and changed some processes and procedures. And that allowed us to get this increased productivity that we were after without, doing the construction at this time. So, we still are going to need it, and it's come down the road, but the future of this industry, like I said, is it's in the brands, and then we'll deal with the infrastructure when it's needed to increase our margins.
Excellent. No, I really appreciate that, Colin, and I'm sure investors do. I do encourage them to kind of look into some of those brand partners that you've talked about, because they really are the top-notch premium. But you're talking about margins. I think that's a perfect segue to look at financial results. Do you want to just share your thoughts in terms of how you think investors should be thinking about sort of Q2 results for 1933 Industries? Because I think they're probably not as rosy, to be fair, as everyone would have hoped. But obviously, there's been some challenges there. So I think your color on that would be very helpful.
Yeah, absolutely. We've been fighting a battle in the industry and in the state. We're hit with a crisis with vape when we had a very vape dominant business model to include heavy production of distillate for other vape brands in the state. After we kind of are coming out of that, we had the town really shut down in early December, which was really weird for the holidays, and ordering's just completely decreased on that. And so kind of those two combined really hit us, and that's where you're going to see that decrease in revenue. Come February, which was the first month of Q3, we bounced right back as far as our revenue goes, and we were kind of headed in that direction for March. Actually, we had incredible amount of pre-orders for March already booked before the crisis hit, and it slowed down a little bit. But that decrease in revenue, it was a temporary thing. It was the climate, it was what it was. And so at the same time too, we had to funding bringing our cultivation facility to capacity. We funded the construction and growth of our California operation and project, and all that without that biomass from our first harvest in December didn't hit products until January, and didn't hit book revenue until end of January, beginning of February. So there's quite a bit of spending without the income coming in from it. And so you're going to see that as the increased expenses and the spending that we had and the loss that we had in Q2. What's important to note is over the last 6 months, I've made a very concerted effort with my management team and with our directors to significantly reduce our spending. And so, it's unfortunate, but we had to remove about 25% of our workforce just for cost effectiveness. And we also reduced about 25% of our non-essential, non-operation expenses. And then I reduced close to 70% of the spending from the pubco, from the public company. So with that combined, you're really going to see those results pan out in Q3 with an incredibly decreased and reduction of our spending, as well as we're hoping that the revenue numbers will maintain consistent coming into Q3. We're hoping that the town lights back on fire here in April, and the orders go crazy. But you're going to see a big change in this company from where it was to who it is in Q3. So the most important thing about these numbers too is I got $9 million in the bank. And, some might look at that and say, well, you lost 6 in Q2, so you're going to be out of business in 4 months. Well, that's not the case. So we have enough money in the bank, and we've cut enough expenses. And then with the pausing of our capital projects that we were doing, if I'm profitable in 3 months, I've got enough money to make it there. If I'm profitable in 6, I've got enough money to make it there. If I'm profitable in 12 months, I've got enough money to get us there. And so the mantra of this company right now is survive, then thrive. And we've positioned ourselves accordingly. And so, Q2 isn't the rosiest, like you said, but I think the investors are going to see come Q3 the different company that we are, and then the direction that we're headed in. And we made a pivot into sustainable long-term revenue, and that's something that a lot of companies are still trying to fight to figure out what that is. And we've done that, and it cost some money to doing it, but we're here and we made it, and we've turned the corner, and it's blue skies from here for us.
Perfect. Well, Chris, I appreciate all the color. I had some follow-up questions there that I wanted to ask, but I mean, you pretty much answered everything in complete detail. So that was fantastic. I wish you guys the best of luck in the coming quarter.
Thanks, man.